As I sit here and record this, Bitcoin is currently sitting at $17,598 per Bitcoin. It briefly broke above 17,800 earlier today as it continues a monstrous rally that it has been on for a while now. Now, if you pay any attention at all to cryptocurrencies, you've likely seen some people are saying this marks a new all-time high for Bitcoin. Now, that might sound a little odd to you considering back in 2017, Bitcoin got up almost to about $20,000 per Bitcoin. So how in the world would this mark a new all-time high for Bitcoin, and what metric are people using, and why does that matter? You ready? Let's dive in. Okay, so just like most things in the financial world, there are different ways to measure value. And with Bitcoin, we don't just need to look at the actual price per Bitcoin. That matters, but some of the other metrics matter as well. Now, one of the metrics that people have been using for a while to call all-time high is basically just like the average purchase price of Bitcoin. And so if you take all of the transactions that have happened on the chain since Bitcoin started and put all of those transactions value together, you'll arrive at something called the realized market capitalization of Bitcoin. And the reason why this metric is looked at by some is simply because it eliminates the issue of Bitcoins that are lost over time. Now, there's a second metric that can be used to value Bitcoin, and that is the average realized price. This is simply if you look at all the transactions that have happened on the chain, what is the average price that they all went through at? Taking all of them, the high, the low, put them all together, what is the average price? And that has been going up as well. That's currently sitting around somewhere around 7,000. Back when Bitcoin was going through its big bubble phase back in 2017 when it went up to 20,000, the average price was a lot lower than 20,000, even though the current price was up at 20,000. Now, the one that is making the headlines today is just the total market capitalization of Bitcoin. And that's the one that is making the news today about it hitting all-time highs as of today, Tuesday, November 17th. Now, the total market capitalization, this is just you take all of the Bitcoins that are currently in circulation and you multiply them by the current price of Bitcoin. Before today, the record for the total market capitalization of Bitcoin was from 2017, obviously, when it got up to almost $20,000 US dollars per Bitcoin. And the market cap at that point, when you took all the Bitcoins and multiplied them by, almost 20,000, that equaled just about 333 billion US dollars. Again, all of the total supply of Bitcoins multiplied by the then price of Bitcoin, about $333 billion. Now, since Bitcoin is currently in the 17,000 range, 17,600 as of the time that I'm recording this video, how is it that the market cap is actually larger than it was back then? Well, that comes down to the fact that the total supply of Bitcoins in circulation has changed. The way that Bitcoin is designed is that it is a decentralized network. So an example of a centralized payments network would be something like PayPal, where you have PayPal, they run a couple of servers and they verify all the transactions that take place with PayPal. All transactions come through their central database and then go out to where they're supposed to go, and they verify that all those transactions are real, that none of them are fraudulent, none of them are counterfeited, that the money actually leaves one person when it goes to another. And since it's centralized, they can control transactions as well. If they need to, they can stop a transaction from happening, or they can reverse a transaction that has already happened. Bitcoin is the exact opposite. Bitcoin is a decentralized network, which means that the entire network controls it. There's not one single entity or one organization that can control or censor, stop transactions, and they can't reverse transactions from happening either. Now, this means that there are a lot of computers and a lot of people out there called miners who their only job is to verify the transactions that come through. And when somebody's paying Bitcoin from one place to another, all the miners on the network, all the transaction verifiers, what they do is they make sure that's a real transaction. And if it checks out, that transaction goes through. Well, this is obviously very energy inefficient, and it takes a lot of electricity to verify all the transactions that are happening on the chain. And so as compensation for this, verifiers, the people who are verifying the transactions, they get paid in Bitcoin. And so this is why miners, they're, running these computers and they're accumulating Bitcoin over time. That's how they're doing it. That is their compensation for verifying the transactions that take place on the chain. What this means is that the total supply of Bitcoins in circulation actually grows over time. Said another way, Bitcoin actually experiences inflation. Just as the Federal Reserve prints new dollars, the Bitcoin network, the way the algorithm works, it releases new Bitcoins into existence. Now, unlike the Federal Reserve, it's not just somebody sitting in a room making hundreds of thousands of dollars a year to make decisions based on faulty data that benefit him and the elites. Bitcoin inflates at an actual predetermined and impossible to change rate, and that inflation rate cuts itself in half every 4 years. This is called the halvening or the halving. So this inflation rate, the amount of new Bitcoins being released, it gets cut in half every 4 years until the very last Bitcoin will be released somewhere around the year 2100. And after that, there won't be any more put into existence. The inflation rate will be 0. So why does this matter? Well, the supply of Bitcoin is growing and it will continue to grow for a while, even though it's at a very predictable and slow rate, especially compared to fiat. But all else being equal, when the supply of something increases, the demand or the value for it will go down. Again, all else being equal. And so you might expect that with the supply of Bitcoin steadily increasing, that the price should not be going up or staying the same. The price should be steadily going down. But again, that is ceteris paribus. That is all else being equal. And clearly in today's day and age, all else is not equal. Considering the inflation rate of fiat, which you're using to measure Bitcoin, the speed at which your dollars given to you by your government are destroyed, and the lack of yield in all other investments right now, the lack of potential in other investments to appreciate in price, makes Bitcoin a very attractive place to park your money, even if it is speculative. This means that despite the actual supply of Bitcoin increasing, the demand for it is going up even faster, which has pushed its price up. Now, before today, remember I said the total market cap record for Bitcoin was around 333 billion. That was hit in 2017 at the peak of its bubble. Due to the current supply of Bitcoin, before today, a Bitcoin price of $17,400 or $17,500, somewhere around there, would give Bitcoin a market cap higher than that of which it reached in 2017, where it had to hit $20,000 to reach that market cap. But there's more Bitcoins, and so it takes a lower price now for all of the Bitcoins to hit that total market cap. And we blew right through it. So like I said, we are currently above 17,500, 17,600 just about as I'm recording this. Who knows what it'll be by the time you're watching this, but we did blow right through that, got all the way up to just over 17,800. And so today on November 17th, the total market cap did set a new all-time high for Bitcoin. Now, what does that mean moving forward? Nothing about my thesis on Bitcoin has changed. The main driver of Bitcoin is people learning about it and adopting it. The more people adopt it, the more chance that it will have to become money in the future. It's not money yet. Buying Bitcoin now is a bet that Bitcoin will be money, will be base money, will be the reserve asset of the future. For the last 3,000 years, anytime a currency has failed, the world and populations have reverted back to gold or silver as money. And so historically, it's not the safe bet, but it is a good asymmetric bet. The most you stand to lose, assuming you're not using leverage, the most you stand to lose is everything that you put into it. So you've got a 100% loss of potential of anything that you allocate to Bitcoin. But if Bitcoin does become money, the market capitalization of Bitcoin will have to grow so much to be able to serve as backing for monetary transactions globally, that in current US dollars, it would have to be priced at somewhere around $400,000 minimum to be able to serve that function. So you risk losing 100% of what you put in, and you risk gaining a potential, 40x return on your money, 30 to 40x return on your money. Still a very good risk to reward ratio at this point. So yes, it's had a monster rally. Yes, there will probably be major crashes and pullbacks in the price from now into the future. I'm not concerned about that right now. Still a very good risk to reward ratio. As long as I'm allocating an amount that I'm fully okay losing and understanding that history, 3,000 years of history says I will you'll probably lose it. If you're a beginner just getting started and you don't know where to get started with purchasing Bitcoin, check out my affiliate links in the description below. Those are the services that I use and that I recommend. So if you use my links, I'll get a small commission for it as well. As always, I really appreciate you guys. Thank you for watching. Have a great day.